So, hi everybody. We are now on the Multichain Interop panel. We have here the great people from Wormhole, Lucid Labs, Offchain Labs, and also Matter Labs, also known as CK Sync. We can start by doing a quick round of introductions if you like. We can start with Wormhole.
Hello. It's Ozzy here from Wormhole. Wormhole's a leading interop bridge. We connect over 10 different runtimes. We move $1 billion a week between chains. And we have hundreds of assets issued via our Burn and Mint and Wrap token platforms.
Awesome.
Hi guys, my name is Anthony Broderick, the founder of Lucid Labs. We do bridge and liquidity management. And on the bridging side, we've unified all the cross-chain messaging bridges. So instead of choosing Layer 0 or Wormhole or CCIP or Excel or a Hyperlane, if you come through as you get access to everybody, so you don't get vendor lock-in, but you get best performance. And we think that that's kind of the next step forward for asset issuers and stablecoin users. Thank you.
Hey guys, I'm Matt. I lead our product efforts at Offchain Labs. We build a blockchain platform, including Arbitrum, a roll-up stack, ZeroDev, an account abstraction and smart wallet platform, and Prism, the leading consensus client on Ethereum L1. Happy to be here.
Hey everyone, my name is Noah. I'm the director of Interop at CK Sync. We're building incorruptible financial infrastructure. It's a network of chains secured by cryptography, not validators.
And just to introduce myself, my name is Mauricio Trujillo, also known as Bunny. I was the founder and CEO of Search Dora. We're a multi-chain search engine and block explorer. Recently, we got acquired by the team at SonarX, which is an institutional index data provider. So we're very all familiar here with the space of roll-ups, with how to be able to make them work, what makes them tick, what gets people to actually use them, which is the most pressing question of them all. So to start, I guess we can start chatting with, so each one of your teams takes a very different approach for interoperability, right? If we all have this platitude of rollouts, we want to be able to make them work in unison, be able to actually have users migrate from one chain to the other. So going from all the way from CK proofs to messaging to liquidity routing and role coordination, what part of the Interop stack are you actually solving or focusing on? And how does it make multi-chain system works better together rather than having a single unified approach?
Yeah, I could start. Yeah, we take a full stack approach. So we sit at the bottom. We run over 1,000 full nodes for the chains that we're connected to. We have a very high degree of confidence for your message observations crossing those chains. That's the base. So you're sending arbitrary messages, bits and bytes, broadcast. So there's no actually destination chain programmed into a message. Then on top of that, you've got to have relayer infrastructure, last mile delivery. And then you've got these new products on top that are sort of like, you got your asset issuance, obviously, burn and mint, lock and mint, whatever. Then on top, now you've got like faster than finality fills. And then we're looking at like the verification layer as well. So I think ultimately the two things you can't commoditize is user attention. So at the top, where do I go to bridge or to interop, or where do I go to integrate that stuff? And at the bottom is the verification layer as well. So we see like a strong commoditization across that front as well. We see like ZK proofs on the ETH side, some interesting ones on some of the alt VMs as well. So we're looking at that TSS. So we're kind of thinking about how we continue to attack the whole stack and offer a full service approach to some of these blue chip issuers, which makes a lot of sense on that front. And then obviously to your point as well, we see our issuers as well kind of working with multiple providers, and that really is part of the abstraction that the interop space is moving toward. It's great to be moving toward for a while.
Yeah, so I completely agree with that point. And that's like really where we stepped into the arena. And we came to this not because we had this big vision of where interop should be, but we were just listening to founders and what they told us they wanted, because they want the best interop provider. But because of all of the different standards and the different bridges that are only compatible with certain standards, there's a lot of fragmentation that the bridges are actually introducing. And as an asset issuer or an ecosystem, you don't want to be tying yourself to a service provider forever, because who knows what's going to happen tomorrow. Maybe they become uncompetitive, maybe they get hacked. You want to have the flexibility to move to whoever is the best performer in that moment. And so that's really why we started to try and unify these messaging protocols, so that you have the fluidity to make the decisions and you can activate whichever bridges you want. The users can decide themselves if they want to. But the idea is just to take a step back and look at it from a higher perspective, that if you look at the early internet, there was a lot of fragmentation in infrastructure providers. And now you've seen a consolidation through all these like plugins and applications and modules and all these things. Everything's interoperable with each other. And that's really where we see the interop space going. Instead of having all of these different approaches that are fully incompatible, now you can have everything working together seamlessly and just route through, whichever one makes sense at that time.
So the question was, what are we working on in Interop that we are focused most on? Sorry.
Yeah, like what part of the Interop stack are you solving, and how does it make multi-chain system works better?
Got it. Okay.
Yeah.
I think following off these two responses, we all work at the platform or the protocol layer, so it's almost impossible to deliver a good experience for users without trying to solve all of the problems. I won't describe the Interop landscape because it would take me 30 minutes, but I think there's two main things we're trying to solve for. One is we're trying to allow users to transact on any Arbitrum chain and move funds, particularly assets that they own, between any chain in the ecosystem with the speed of around less than 3 seconds without compromising the security guarantees that they have in a traditional rollup. A very, very difficult problem, but that's what we're optimizing for. We think that's a reasonable trade-off. The goal is to get to a place where building or working or using any blockchain feels like you're using one chain regardless of where you are. Maintaining the latency of a single chain instance today is very hard. So we're focused on that. The second thing is we're very focused on ensuring new chains or new application developers, we want to ensure that they can customize the execution environment to their needs. You see a lot of institutions moving on chain. They have different requirements around the asset issuance and the asset bridging than a traditional permissionless ERC20. And sometimes that means it can move faster, and a lot of times that means it's going to move slower. So we're focused a lot on enabling those types of new assets being brought on chain to be able to move seamlessly within the DeFi ecosystem.
Yeah, so at zkSync, we are building zkSync Connect, which is the first interoperability protocol built specifically for institutions. It allows them to eliminate middlemen while still having private atomic interoperability, and you can move any asset, any size, anywhere within the network within 1 second. So institutions don't need to compromise on speed, trust, or really anything when they want to move assets within the network, so that they can move assets much faster than the traditional means.
Amazing. So now, after discussing specifically the different approaches that we're taking to interoperability and how we either create a standard or we're the ones create a standard for a chain or create a standard for messaging, this all, of course, leads eventually to some sort of liquidity issues, right? Like some liquidity problems, liquidity fragmentation, how to message liquidity across all these networks. So how are you tackling that? Like, how do you see liquidity aggregation or routing evolving, right? Are we going to go to a world where everything is passed just by a couple routers? Where do we think we end here?
Sure. So on the conversation around standards, I think this is somewhere that a few years ago it would have been better to see the EF take more of a lead on, like proactively instead of more reactively in the last year or so. And because there wasn't that much guidance and that much cooperation between different providers, that's when everybody became quite competitive, building their own standards. In many cases, they were just trying to build better technologies. In some cases, I think they wanted to create vendor lock-in because it was more secure in terms of long-term business fundamentals for them. But in light of that having transpired, the way that we've looked at the space is we don't necessarily need one standard to rule them all. We accept the fact that all these organizations are going to have differing opinions about what makes sense, and so we built Lucid in a way that it can be cross-compatible with any standard. So through Lucid, you can have an OFT from layer 0 working on Wormhole or Hyperplane or XLR, or you can have an IST from XLR working on layer 0, for example. So you can come in from any standard, whichever one you want, and have access to every major bridge simultaneously. So therefore, you're kind of eliminating the fragmentation for the actual asset issuers, which I think is a very valuable contribution in and of itself. But again, we would still like to see more standards, some more best practices around standards, some more cooperation around standards. I know Uniswap was working with Across to create some intent standards, which I think was a very valuable contribution, and would like to see more of that.
I'll take the opposite side of that bet. I think that overall, the EF getting involved with more standards leads to just standards that don't get used. For the last 2 years before I joined zkSync, I led a shared sequencing company. Shared sequencing was one of the most standardized things ever by the EF. It did not work whatsoever. I think taking an opinionated approach and building from the ground up, we've done at zkSync, and saying at the core, we're going to have a shared bridge contract is the way that you solve liquidity. I think that We've seen it already with OFTs. We've seen it with Wormhole. That if you want to win out in the interoperability space, you need to have a decision that you're going to make. You're going to open a door that you can't go back on, so to speak, and essentially make the hard decisions. Saying that you want to build a standard for all standards just means that, and I've seen it happen, just means you spend more time lobbying people than you do getting people to build real products. And for us, we're focused on getting banks off of Swift and onto blockchain rails more than anything else. If other people want to adopt our standards, we'd be glad to help them. But we don't want to spend the time lobbying them for years.
I'll go quickly. It sounds like there's two questions we're trying to address. One is on, are standards useful? And the second is on, what is liquidity fragmentation going to look like in 3 to 5 years? I think on the standards point, it really depends on the use case. Like if you look at internet protocol standards, for one thing you want to accomplish, there could be all the way up to 30 standards to do that thing. You look at intents in the EF or the EVM world, and there's 4 or 5 competing standards, and really they're only dictated in terms of success by who adopts them. I do think it is useful to have a framework for how to send a message from one chain to another, particularly from like the account derivation standpoint. Now, generalizing that so that it can be used with any asset seems like a good goal, and I think we're almost there in terms of formalizing it. So I think there will be a few standards, and then we should stop over standardizing, try to bring users on board.
Agreed.
I think the second point, in terms of liquidity fragmentation, I think it will be the case that liquidity is fragmented across multiple infrastructure architectures, but it's going to be exactly what it's like when you're using Netflix. You click on a movie you want to watch, and you might be sourcing that like from the data pipeline of AWS or GCP, depending on the day or your region, or like whether or not Cloudflare's up, like it isn't right now. And so I think that is what's going to happen, where liquidity will remain fragmented in terms of where it lives, but the user experience will abstract to the point where you can source it easily from any interface that you need to access it from.
It's also important to show users the trust assumptions of what they're doing under the hood, especially as we're seeing these billions and potentially trillions of dollars of assets moving on chain. We've spoken to the banks, we've spoken to the nation states that are coming on chain. They want to understand the security under the hood. They're fine of it being abstracted to their end user, but it should never be abstracted to them themselves. They want to know exactly what's going on under the hood, the same way that I would want to know what's going on under the hood if I'm moving $1 billion. It's just too large of a scale for them not to understand it.
I think we've all noticed what's been happening in the past few weeks with some of the looping strategies unwinding. Maybe this is where the AIX blockchain buzz marriage can start to deliver some utility with the data. I think that's very important. Allowing automated agents to kind of go and roll and kind of patrol, that will help us, I think, in some ways. On the fragmentation issue, I think there are some incentive misalignments, which is really kind of interesting to think about. So let's say like a large interop provider may be incentivized to issue a permissionless deployment for a certain asset, and then go back to a foundation and aim to then canonicalize it after the fact. We've seen that happen. It's made headlines, really. We've been stuck on both sides of that. So I sort of walk the fence with that, because that can be a good strategy for building, liquidity, be decisive, be fast, but then to do it fully permissionlessly without, ask for forgiveness later after you've created the fragmentation and it's against like a decision. I don't know where that sits. That's kind of like, that's part of our industry. In terms of like fixing some of that fragmentation and kind of what you're talking about as well, maybe some of these intense protocols that are popping up, maybe they'll last for, 3, 4, 5 years. There'll always be a market for cross VM intents, I think. But then in terms of EVM, we're seeing some really good efforts in terms of trying to standardize some of these interfaces. Around intents is a great place to start, because that's taking advantage of, technical arbitrage. Like we're like finality times. Like we'd love to see validity proofs. We would love that. Absolutely. What you guys are doing is fantastic on that front. You guys are doing a great job in terms of like enabling your builders that are building chains to be able to communicate really seamlessly. We've seen that in action. Huge fans. So I think that's really interesting. I think we'll see a bit of that win out. In terms of like the cross-chain standards as well, this is where it gets kind of tricky, right? Because we're sitting, I would sit here and say there doesn't need to be a destination chain tagged to a cross-chain message. It should be broadcast. Others will say it needs to have a destination chain ID included. And we can't agree on simple things like that. So it's kind of like becomes a bit of a circular discussion. And then you talk about the incentives again. And so there's just like land grabs, because the incentives are so heavy from the top down. you've got everyone out here just trying to make land grabs some of the time.
So I think that we actually addressed a lot of the standardization questions and liquidity fragmentation questions so far. We could dive a little bit deeper into whether or not we believe that eventually we'll end up with having several coordination layers or several messaging orchestrators of sorts. However, I think it's a bit more interesting to actually see these things in practice, right? Like we have seen this entire onset of institutions coming into crypto. We've seen even hijack some standards. We've even seen crypto native teams like the team at Hyperliquid, right, take advantage of the fact that they can bring in deep liquidity of USDC into their network and then launch their own stablecoin to be able to somewhat vampire attack the USDC liquidity that they had already on their chain. We can start with seeing how these teams, let's start with institutions at least, right? Like how are you preparing your infrastructure for the audience that wants to have this increased reliability on interoperable assets, settlements, risk management, and whatnot? Maybe the team of CKC would like to elaborate a little bit on the work that you're doing with some enterprise. And also, of course, I know we cannot always talk about our enterprise clients, but being as descriptive as possible will be appreciated.
Got it. Yeah. So on the institutional side, for us, we really wanted to focus on solving the problem of eliminating trusting middlemen, as well as enabling atomicity and privacy are two major focuses for us as well at zkSync on the interoperability side. Essentially, the way we came to these features being very important was through conversations with these institutions and seeing where were really the gaps in the current interoperability solutions that they were trying out. And essentially discussing with them that atomicity was very important because, for example, if you're doing cross-border Forex trades and you have one central bank that wants to transact with another central bank and they want to do a Forex transaction, that Forex transaction needs to be atomic because they don't necessarily trust each other fully. So for things like that, you do not want to have the counterparty risk. That's where you need atomicity. Privacy is good for these use cases as well at scale. And then also having essentially the shared bridge connecting this all together allows us to eliminate the liquidity fragmentation from day one, which we think is crucial because overall, a lot of teams kind of have to solve liquidity fragmentation at a later point. We wanted to solve that from day one with our system. That makes it much easier for these systems to scale up later on, because that way you don't kind of run into these issues of you need 17 different bridge providers for 17 different chains. We really wanted to solve that by having our own canonical solution, which just makes it easier for these enterprises to operate on chain. So you can have chains like ADI, which is launching a stable coin in the UAE, interact with chains in the US or in Europe or in Asia or anywhere else within the world, and really bringing truly global blockchain money rails to everybody.
I think like generalized ZKVMs, like you guys are working on, can go a long way in helping because you can have one abstracted pattern that makes sense for a Web 2 developer, Web 2 enterprise developer at a financial institution, and they just have one pattern and it works with all the chains that they care about. So I think that's really interesting on one front. I think when we talk about institutions, maybe we could think at the moment we can think about stables and payment flows, reducing that fragmentation, and then also your sort of RWAs and your kind of tokenized funds. Both are really interesting. I think for me, being a payments guy myself, that for me is so interesting. So you think about like even the liquidity fragmentation of fiat currencies and disrupting the correspondent banking flows. If you have a local incumbent stablecoin issuer, often like a listed fintech that's issuing a local stable, it could be like the AUDD stable issued by Novati or the BRL by Transfero. All of a sudden, they don't have to use USD correspondent banks. There's only a tiny cabal. There's like 4, 5, or 6. The SWIFT system moves $50 trillion a day. And SWIFT is now telling us they don't mind if we kind of, come in and we take a little bit of that, and they just want to be the naming convention for these things. But this kind of middle route fintech, listed fintech, incumbent, bringing on these stables makes things really atomic. All of a sudden, a merchant in Brazil that I pay doesn't have to wait 28 days and pay 3 to 5% for me paying in Australian dollars. I think that's really, really interesting, thinking about that. And then it doesn't matter what currency you even hold at some point in time when that's all kind of liquid. So I think we can kind of attack it from the ground up. Just in terms of how it becomes difficult for institutions to do this, it is incredibly difficult. Coming from even, say, the open banking space, when PSD2 was mandated, there's 10,000 European banks represented by about 200 banking networks. They came up with 7 different standards between them. There was a Berlin group, there was a different group, and all the interfaces were different. None of them worked. But then if you look at the card issuers, they've reached this point of duopoly or oligopoly, and maybe that's where we would need to get to kind of agree on something. They agree on the contactless standards. They have EMV Co, which sits on top of Visa, MasterCard, Diners, Amex, and Alipay, etc. So they all do get together to agree on standards because it's in their best interest at that point. So it's like, when do we get to that point? Do we ever get to that point? I think that's kind of an interesting question.
Yeah, I mean, I don't want to drag this particular point on too long, but there's a lot that we could do. I would say, most of the enterprises that we're working with, hard to describe publicly, in detail what we're doing. But I think the biggest challenge that I'm seeing with a lot of the folks we're talking to is you're dealing with a type of project or a really an actor or person that has a much lower risk tolerance than every other person that's in crypto, right? Users or projects. There's so much risk that is involved when you move your users and their assets on a blockchain, despite the security primitives that we try to purport. Like, it really is a much more adversarial environment than banks shaking hands and talking directly to each other. So I think that just leads to the velocity of their movement being much slower. The rules that they put in place around travel of their assets and how users can spend or not spend their money creates somewhat of like a mutually exclusive value proposition from the blockchain itself, despite there being this economic value add, which is, well, if you're most financial institutions with a 9 to 5 days a week trading volume, moving to a system that you don't have to pay a higher security budget for, that has a 24/7 trading environment, you will make more money. So it's kind of it's just a very difficult walk to walk with these groups. But I do think that the key challenge is finding that balance between keeping users safe from their perspective and within the bounds of the law. Remember, not all regulation is bad. We do need to
Yeah.
protect the people that live in our society from other actors that want to take advantage of them. But trading that off with speed and things happening very, very quickly, which is what we've come to expect with the permissionless system.
I think just one quick one to add. I think there's some interesting things to be said around like defense in depth, being on maybe both sides of the on-chain and off-chain. We're seeing like insurance for the Aave app deposits, which is like off-chain insurance. Insurance is kind of interesting. Then on-chain, like for us, we do really walk the line. It's a defense in depth thing as well. You can set, you set rate limits in and out. You can set global accounting that's enforced in a certain way. You can bring reputable verifiers on while we're in this kind of in-between period before we get to fully trustless verification that we can all trust properly. So I think there's kind of a line that we're all kind of walking, and there's little bits that we can pick up on the way to kind of add into the basket.
Yeah, and just on the point around like security and performance, obviously, as you say, it's a very different type of persona, very different risk profile to the users that we're all normally dealing with. And obviously, it makes sense because these guys are coming from very stable environments. They've not seen major financial hacks on their rails for a very, very long time. And so in our case, when we spoke to these, some of these financial institutions, and we were describing the product that we had where you could basically have assets over multiple bridges, we basically described a system that you can have multi-bridge consensus. So because the biggest risk with Interop, especially with asset transfers based on messaging standards, is that the message, for whatever reason, gets lost midway and you can't recover those funds. That is like the worst possible scenario that's possible. And so the way that we've tried to mitigate that and try to make these institutions feel more comfortable in an on-chain environment is by having multi-bridge consensus, which is actually modeled on Aave v4, whereby you can send the message through 3 separate bridges at the same time. So it could be Wormhole, Layer 0, and CCIP. And then on the destination chain, 2 out of 3 of those messages have to agree that everything is safe for it to execute. So even if one bridge, for whatever reason, goes down, gets hacked, has a bad day, it doesn't matter. You can still recover those funds and still execute the transaction. So that kind of level of redundancy and consensus, we think, is like the ultimate end state for where Interop is going to go. But obviously right now, because some of the bridges are extremely performant, most of them are kind of still kind of getting to that point. This kind of technology will only be used on the institutional level. But we're hoping, over the 3 to 5 year horizon that we can make this default for even small value transactions because the cost and the latency is just decreasing so quickly.
Okay. So just jumping off that reasoning, like I had no idea that you were doing redundant messaging. Actually, I think that's really cool. So using that, and let's just keep it to like 1 minute per answer. But what is one very conscious upgrade, integration, or product shipment that you are doing very actively to be able to enable all these new actors coming to a on-chain world that is a lot more interoperable?
Yeah, we're very excited about L1 Interop. We recently figured out a solution where we can essentially allow users on a layer 2 blockchain, whether it's a public or private blockchain using our Privatium stack, to interact with L1 DeFi. So that's Aave, Morpho, Uniswap, Pendle, really any L1 smart contract in less time than it takes for Ethereum to be final. So in less than 15 minutes, we think it's going to be around 2 to 5 minutes. So with that, you can essentially have these L2s, these banking L2s tap into L1 DeFi. So if you want to be borrowing millions or billions of dollars, the L1 we believe is the best place to do that. And that's why Ethereum has become our main capital hub at zkSync.
So making all DeFi integrations go back to Ethereum through that. Yeah. Do you want to?
Yeah, I mean, there's a lot of things we're doing in the interop space. I think one really exciting development that we haven't talked a lot about publicly is really around allowing chain operators to essentially cover the risk of sequencer equivocation in the case of an exit transaction. So when you look at a cross-chain transaction today, if you want to move faster than Ethereum finality, even if Ethereum finality gets much quicker, if you want to move faster than that on the order of milliseconds, you need another party on the other end to give your account the money before it clears on the parent chain. And in order to do that, you need to rely on the chain that you're sending the funds out of to be telling you the truth about its state. And what happens if something goes wrong at the protocol layer, Ethereum hard forks in the middle of a batch posting, and you're kind of screwed? Well, what happens then? Well, you can cover that risk with financial instrumentation. And so that's something that we're deeply thinking about to enable multiple chains to be able to essentially cover each other's risks, but taking that liability on themselves.
Amazing levels of coordination on that, actually. Go ahead.
Perfect. And on the Lucid side, we've just launched our multi-hop functionality, so that if you have an asset that's natively mint and burn through our internal bridges like Wormhole, CCIP, etc., but you want to get to an asset that is not natively inside of these asset controllers, then we'll route you through our internal bridge to an unlocked chain, where then we can route you to an external bridge like an Across, a Relay, a Stargate, a Mayan. So the user feels like they can go from any asset to any chain, and it feels like the user experience is seamless. But we're actually doing 2 bridge transactions, stitching them together. And really, we're trying to sit at the nexus point of all these interop solutions, where we can have all these internal meshing bridges combined with all these intent bridges, and everything can sit very neatly together in these like sequential transactions, even swap transactions. And so we're really just trying to unify everything, both on the protocol level and just in the UX. And so, yeah, the multi-hop's gone live already, and cross-chain swaps coming soon.
Amazing.
That's cool. Yeah, to both of your guys' points, AVS insurance, so whether it's the chain or the operator, the application level operator that wants to put that up, perfect, that's fine. To your point as well, threshold, enabling thresholds for verification is really interesting. So you might get 1 or 2 institutions that want some type of like off-chain check in there as well. You want to enforce that, that's cool. You want to add ZK, a ZK proof in there. You want an ETH consensus proof, or near or something that we have available at the moment. That's also sweet. One that does get me excited as well is new verification schemes that is kind of like a stopgap that does add this defense in depth for us TSS. So we have a Schnorr scheme and an ECDSA scheme coming out. So we'll have a native Dogecoin bridge, Litecoin. Kind of interesting thinking about these. So reach is really important. So for us, thinking about reach and scale, signature verification costs, and just kind of wider accessibility for it. So building the platform.
Well, thank you very much to everyone here. Thank you all for coming and paying attention to us as well. That's all the time we have. So thank you.
Thank you.
Thank you.
Thanks, everyone.